Hello everybody, this is Jim Musgrave with Research Financial Strategies. Today is May the 11th, 2015, and this is your market update. So we have the S&P 500 up right here, and I drew this little wedge-shaped pattern. We have support here going back to last December, and you can see how it slowly goes up. But you see this horizontal line right here. This is our resistance line. And what this wedge-shaped pattern shows us is that the market's either going to break up higher or go lower. It can't continue to be wedged like this forever. And so you can see that the market has really struggled to break through the all-time high of 2125. You see that we hit that here on April 27th, and we've kind of touched it, but we just can't break through. And so one thing is that there just hasn't been much volume. If I go to the VIX, which is the volatility index, you can see, back here in October and December of last year, when we had a lot of volatility and things were dropping, we had a lot of volume. But look how the volume is just kind of flattened out from March, through here we are in May. It's just been really dropped. Not much volume, not much going on. And so, we need some excitement in the market. Just the market seems kind of tired. Now, we have gone through earnings season, and that has caused some uncertainty. But, on a positive note, we actually had a relatively decent jobs report that come out on Friday. And so that's where that big green candlestick came from, was a good day on Friday because of the jobs report. So kind of, where we are overall, we are still bullish. This is the 200-day moving average, so we're above the 200-day. But, in the short term, the first quarter has been pretty flat. And so our market forecast, this little green line right here is our intermediate term, and, it has dropped a little bit. You want to be over 80 to be truly bullish. Now we're around 63, so it's come off a little bit, but it's not the end of the world. So again, that's where we are with the S&P 500. If I go to the small caps with the RUT, that's the Russell 2000 index, you can see that the Russell's been a little weaker. We've seen some weakness in the small caps in the last few weeks. Right here, look at our green line where we were around 92% about a month ago, and it just plummeted down to around 14, 15 just a few days ago. So that went from very bullish to very bearish very quickly. And you can see in the squeeze right here where we see these red candlesticks that are below this horizontal line, that means that the momentum is going negative. But when we see a transition to yellow, that means that we're starting to turn around a little bit. And once we get to this light blue, that means that we're starting to see some life, and we're starting to get some positive momentum. And that's kind of what we're seeing short term with the Russell. We've had 3 days of positive momentum, although you can see it's pulled off a little bit off its high here at late afternoon on Monday. But, things could be worse. We have a cross on the MACD, which is typically a buying signal. And we've got a little bit of a bump off our intermediate term, which is going up a little bit. And our short-term indicator has gone up to positive. So hopefully the Russell can continue to have a little more momentum to the upside, and we'll kind of see what happens. The next thing I want to go to was the bond index, and this is what was a little concerning. We have the 10-year Treasury yield index, and this is ticker TNX, and you can see that the yields have dropped over the third and fourth quarters of 2014. When the yields drop, bond prices go up, so that's a good thing. However, we've seen a reversal. I mean, look at this big column of X's here in late April and into early May. And so when the yields go up, bond prices go down. So you can see that this has just been all over the place in terms of the yields, and that has been reflected in the core bond index, ticker AGG. And you can see right here that there's been a lot of volatility in the fixed income arena. So I expect the volatility in the fixed income to continue. Again, the market is trying to figure out what is the Fed going to do? When are they going to start raising interest rates? Is it September? Is it later in the fourth quarter? We don't know. But, again, the Fed, it's all data dependent. And so we won't know until it happens. And so regarding the fixed income, it's always a good idea to diversify. We're well diversified in our bond portfolio. We're actually beating the bond index, which is a good thing. We are diversified into some other non-traditional fixed income securities, such as some preferred stock ETFs, which gives us a little upside potential of the market as well as a nice yield. So just to kind of wrap things up here, again, going back to the S&P 500, we just got to break out. We just got to, it's either going to go to the upside or it's going to break to the downside. And so I'm crossing my fingers. Hopefully we have enough momentum to break up to the upside. And, you know, that's about it for right now. So if you guys have any questions or concerns, want to give me a call. My number is 301-588-0514, or just send me an email, jim.musgrave@rfsadvisors.com. And until then, happy trading and have a great day.